Crypto Spring, Bitcoin, Ethereum, and the forces shaping 2025. Hey there, and welcome back to Crypto Sense. I am Neil, and today we are going to break down the latest market moves, analyze what's really happening, and explore how it could impact your next move in the crypto world. In today's video, we will be exploring some key factors that are shaping the future of Bitcoin and Ethereum, including whale behavior, macroeconomic influences, and the ongoing market shifts. With Bitcoin steadily rising and Ethereum showing signs of strategic accumulation, we will break down what's happening behind the scenes and what it could mean for investors in the near future. We will also take a closer look at how geopolitical factors and monetary policies, especially in the context of the US, are impacting the broader crypto landscape. So, sit back, relax, and let's make sense of it all. Oh, by the way, subtitles are available, so feel free to use it anytime. So first, let us start with Bitcoin, which reached 86k in the futures markets, briefly fell, gave a fake out, then gradually rose again, hitting 88k, before settling in the mid 87k range. Long positions are strongly formed around the 83k level, while short positions are concentrated near 90k. As mentioned in yesterday's video, 90k is the key price level for short holders, so it's important to figure out what action is unfolding at this level. If we monitor it correctly, we can better understand how the market reacts in the short term. Bitcoin is rising little by little each day, and one of the most important changes in this phase is the money supply. Along with that, a net inflow into Bitcoin spot ETFs for several consecutive days is also contributing to Bitcoin's steady rise from 80k to 87k. This small inflow can be seen as a signal that investment sentiment is shifting, potentially moving from negative to neutral or even positive. Since shifts in investment sentiment are necessary for Bitcoin to gain upward momentum in the future, this small change is an important factor. As this trend continues, not only Bitcoin but also the US Standard & Poor's 500 has turned upward at a significant historical point. Looking back, liquidity shocks occurred in the S&P 500 during the shock in 2024 and again in 2018, temporarily triggering a panic button. When you look at these two cases, if the transition in the current market is managed well, this year's market could see a similar course as the summer of 2024. If not, we may see a repeat of 2018's. The S&P 500 is crucial because Bitcoin and altcoins have shown a high correlation with the US Nasdaq and stock markets since 2020. This means that the movement of US stocks will play a major role in determining whether Bitcoin faces further declines or continues its upward trend. The biggest difference between an uptrend and a downtrend here lies in money supply and liquidity injections. In 2018, a liquidity shock led to a major market downturn. Moving forward, monetary and fiscal policies under the Federal Reserve and the Trump administration will be key factors. Although there has been much talk about a recession, the HY credit spread remains stable, suggesting that recession fears may be overstated. Some believe a recession is unlikely, and I personally agree with that perspective. If a recession were to happen, the current poor performance of the Nasdaq, Bitcoin, and altcoins could already be reflecting it. Since it has not even been a year since the Trump administration took office, any negative economic developments could prompt urgent countermeasures. Let us take a look at the Fear and Greed Index, shall we? The index is more pessimistic than yesterday, signaling fear, indicating investors are cautious and apprehensive, but no panicking. In the short term, while Bitcoin is gradually rising from 80k to 87k, there are some risks to consider. As you can see, the US 10-year Treasury yield is rising again. And to curb this, the Trump administration has pulled the tariff card while appointing a deputy chairman of the Federal Reserve official. However, despite these efforts, US interest rates continue to rebound. When yields hit 4.3%, the Trump administration frequently made unpredictable statements, shaking the markets. With the recent rise in the 10-year yield, in my opinion, we need to be ready and brace ourselves for more intervention. So now let us take a look at the dollar index. You can see that it fell, stabilized, and then rose again from 103 to 104. Those are turbulent times with a lot of uncertainty. And as I said, new measures by the Fed might occur. As Bitcoin has risen, open interest, OI, related to Bitcoin has also surged. Regardless of whether positions were long or short, market participants have been heavily involved, causing a spike in OI. Historically, when OI surges, Bitcoin tends to experience a sharp correction. This suggests that we are in a period where caution is warranted. The market has been showing limited volatility, with Bitcoin gradually rising, then dipping slightly, then rising again. Meanwhile, Michael Saylor, the CEO of Strategy, formerly MicroStrategy, and the biggest Bitcoin holder, has purchased another 6,911 Bitcoins for $584 million, doubling down on its long-term belief in Bitcoin. His buying strategy speaks for itself. Now they hold $44.7 billion in Bitcoin, cementing their dominance. And it all comes down to one thing: buying the dip like it's a clearance sale. When whales move, they are sending a message. Bitcoin isn't just alive, it's gearing up for something big. But Saylor is not alone in this display of confidence. BlackRock, another major whale, has been accumulating Ethereum through its Beetle fund. Ethereum has lagged behind in terms of price appreciation, leaving many Ethereum holders frustrated. Yet, BlackRock continues to increase its holdings. This highlights how major financial players with significant capital are taking a long-term approach to the market. Based on the cumulative volume data, we can observe that Ethereum whales have been more coordinated in their purchasing behavior compared to Bitcoin. The market has seen sharp upward movements, with Ethereum reaching $2,100. While excluding the brown and purple whales, most other participants seem to be waiting on the sidelines. One of the key factors behind Ethereum's recent rise is the significant decrease in selling pressure. With fewer sell-offs, Ethereum has been able to climb from $1,960 to $2,100. And this trend has been provided support for the price, allowing Ethereum to enter a consolidation phase. As whales continue to strategically position themselves, it appears that they are gearing up for long-term gains, further supporting Ethereum's price stability and potential growth. Now, for more context, let us talk about the macro environment. The Trump administration's universal tariffs take effect on April 1st and 2nd, but not all goods will be affected immediately, as some exceptions will be made. This is significant because tariff uncertainty has been a major factor shaking the market. After April 2nd, with clearer policies, investors may gain more confidence, potentially leading to more active investment strategies. Meanwhile, the US has already passed the Strategic Reserve Assets Act at the federal level, and implementation is underway in various states. While the market remains volatile, major players are strategically positioning themselves for long-term gains. And recognizing these shifts and adapting accordingly is key. And that's a wrap for today's deep dive into the future of crypto. We've covered a lot of ground, from Bitcoin's steady rise to Ethereum's strategic accumulation and the macroeconomic factors at play. As always, the crypto market is full of uncertainty, but with careful analysis and a keen eye on the trends, we can all make more informed decisions about our investments. So, don't forget to like, subscribe, and hit the bell icon to stay updated on the latest market trends. Feel free to share your thoughts in the comment below. And what do you think about the current market conditions? How are you positioning yourself in this ever-changing environment? Thanks for watching, and I will see you next time on CryptoSense. Stay sharp, stay smart, and keep making sense of crypto.